afternoon, traders. It's Bill Baruch with Blue Line Futures. It is your daily midday market minute. We have the dollar making a move today, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from a website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. Yeah, the dollar is making a bit of a move here to start the week. Some of that's from non-farm payroll on Friday. Yes, that was a good report. We had job growth basically right in line with expectations, but lukewarm. We also had average hourly earnings, or the wage growth. It was a little slower than anticipated. The month over month, right at that 30 basis points increase. But the year-over-year number at 4.2% was just below 4.3%. The equity market actually reacted fairly good, and the currency markets were overall quiet on the reaction to it. But you know what? The unemployment rate did go to 3.5%, down from 3.6%. That cycle low, which is a 50-year low, is right at 3.4. So right there, and the participation rate has increased really for about 6 months in a row, has been steadily grinding higher. Seeing people come back to work is a good thing. You also have that sort of core 25 to 50-year-old full employment taking out pre-pandemic levels. So people are coming back to work. The Fed wants to see that. Wage growth isn't taking off, and it's coming in a little bit. The Fed wants to see that too. But the job market remains tight, and this was overall, it was another good report. I think of it a bit more Goldilocks. The dollar is rallying today, and you're seeing some pressure on equities. I think that is more for a couple other reasons. Bank of Japan governor, he really this morning pointed to continued ultra-loose policy, no pivot into being more hawkish, which is where Kuroda has left the Bank of Japan. And then you also had some news, the PC buying. The Apple's PC purchases were down about 40% for over a year in the first quarter. So that really brought some lukewarm news to the tech space. But the market is battling back from some of its worst levels of the session. With the dollar higher, of course, it's weighed on commodities a little bit, but the S&P's off its worst levels. It did stick its nose back below 4,100. Trading into that low area we saw last week. We have a lot of support levels down there, and we're seeing a response so far. But we do have 41.21 as a pretty good area of support. This was a low aligning back to non-farm payroll. And then if we are able to get above there, we have some strong resistance overhead. It's all highlighted in the Morning Express. And same thing with the NASDAQ. It did hold another dip below 13,000 and battled back. So we're seeing some constructive responses to support across the indices. And the Russell 2000 didn't really, after the bell, it's been trading positive. It's been holding up a little bit better too. So that's also a good sign for sentiment in general. But like I said, the dollar's weighing on things. However, we're seeing responsive support. But with that dollar, it could be attributed to a bit of the crude oil weakness, more so in the metals. Crude oil, but just sort of working and digesting the move from a week ago. We have some big support levels in crude around 79.5, and we have another response to that. So continued consolidation here in crude. We will have inventory data that does start coming out here through the middle of the week. And last week was I think fairly bullish, kind of seeing the products really take off from there. So I'm watching here as we get into more seasonally bullish time of year for gasoline. Watch those levels in crude oil though, and then talking about the metals, we're seeing all the metals lower here, and the U.S. dollar stronger is certainly weighing on things. Gold, it's stuck its nose below 2,000. It's hanging right there. It has surrendered its jolts surge from last Tuesday. However, it's battling at that level. Silver is remaining a bit more sticky. We had a nice move in the metals early this morning before the Bank of Japan governor started talking, and that really weakened the yen. The yen is down about a whole point. Obviously, gold's following. Silver's seeing weakness. Platinum has reversed. Platinum has run into a bit of resistance around 1030. It struggled up there going back to last week, and so we're back to about $1,000 in platinum. Copper it did trade higher, almost 404, and has reversed lower too, down to about 397. So we're seeing some weakness across the metal space. Is this just the dollar, or is this more concerns of recession? Because you're seeing it across all of it: gold, silver, and copper, the precious and the industrial. Well, remains to be seen here what the dollar does and what rates do. Rates are overall fairly quiet at the 10-year, right around that 3.4%. So we'll see how the session unfolds. And our team is here to help you navigate what's going on in the metals, what's going on in the equities, everything across the board. Give us a shout. 312-278-0500. Remember, futures trading involves substantial risk of loss and is not suitable for all investors.